Good morning, ladies and gentlemen. It's coming up. You can see I'm going to start. It's my cue for this week. And what a week it's been. I have to admit, the last 2 weeks, my forecasts have been totally 180 degrees out. It's been a very, very tough time. And trying to keep track of everything, especially when you do everything by charts, has been quite a trial. This morning's analysis took twice as long as normal. Trying to work out my way of analysis is to do a lot of measurements. I try and fit in good relationships to different waves within a particular movement. So I get the smaller waves moving into the bigger waves. Unfortunately, that was really, really tough this morning. However, I can actually give some guidelines as to the sort of areas that I think that we should be watching for, and I'll cover that in a minute. Now, normally what I do is go through a spreadsheet with all the fundamental releases coming out over the coming week. Hands up those who think that these releases are having any sort of impact in the market. No, I can't see anybody with any hands up. You're absolutely right. It's a total waste of time, I think, for this week, to be honest. Everything is going on sentiment, it's going on fear, it's going on complete panic sometimes. The way things were going yesterday a couple of times, it certainly looked as if it could be panicking. So what's happening? Why was I wrong? The thing I didn't consider over the last couple of weeks was the fact that the market was short of dollar funding and it couldn't raise it in the credit market, so I had to buy dollars. That's one of the reasons why the dollar's been going up so fast. I'm sure you've read it, so no need to repeat it. But charts are coming in a minute. I'm just going to have a little spiel. You'll have to listen to my boring voice. You may go to sleep if you so wish. I will make a funny noise when the chart's going to come up, because they are, you're absolutely right, they're the more interesting things. Well, I'll tell you what, the bailout was a complete fiasco, the bailout vote. You're wide awake, I'm beginning to go to sleep, but there we go. The bailout vote was a complete fiasco, wasn't it? Okay, it's gone through. People are still buying dollars. Getting bad figures out of the States, people are still buying dollars. It's a little bit, I'm wondering whether it's all to do with people still raising dollars for funding. I can't believe it is. There are suggestions that the European community are behind the curve on reacting to the crisis. You're absolutely right. The bailout does delay the inevitable. It could well delay it for a year or maybe a bit longer, but it's just going to continue getting bad. Basically, what have you got? Suddenly, after a year ago, the European officials are saying the European banks are well funded, no problems. Suddenly we had Fortis go, we had Dexia go. This past week I had Hypo Real Estate looking pretty bad. And in the UK, Bradford and Bingley, Halifax, the sort of building society type banks that have suddenly gone under the cosh. They're suddenly waking up, smelling the coffee, and realizing that things aren't quite as rosy as they thought. A year ago they were saying inflation's going to go down and that growth was going to stay firm. The European community does not rely on the American economy. Well, they are having to turn around. They're all now beginning to panic. You've got different countries saying how much they're going to guarantee funds for deposits. A lot of bickering and backfighting and so on. And that's likely to continue. I think there will be some sort of calming this month over the next couple of weeks. I think it's going to begin to calm down. If you think of the crises we've had, especially in the stock market, October is one of those months that keeps popping up as either a time for an equity market high or an equity market low. and here we are in October. And to me, I do think we're going to get a low. There is still some panic to go yet, but I think the panic is going to begin to slow down. It's going to become a bit more two-way. Now, in a longer term, yes, it is just being delayed because, okay, we're going to get a bailout. There's a lot of people have been pointing out, is it really going to solve the credit crisis? Not really, because banks are really concerned about lending to each other, and they're going to have their lending criteria tightened considerably. You're going to get more movements. For instance, I think the Japanese are going to start pulling investments out of the States. I think that's exactly what's happening and why now, and that's why the yen is so strong. And as you will, if you've been attending these seminars with me, the cycles are showing that dollar yen is going to go straight down, and I think it could well touch 80 this time next year. And that is probably also the Japanese life assurance are going to start pulling their funds out of T-bonds. They were going to keep them there without any forex hedge. I think they're going to be making some very serious decisions over the next few months. But another thing I just wanted to make a little point about was, you look at what's happening. The dollar is going up. What is that going to do for the US economy? They had seen some improvement because exporters were able to sell at lower prices. That's been snuffed out. Consumers are seeing their jobs disappear. They ain't going to be spending their money. They probably don't have any. They can't borrow anything. Their houses are going down the drain. The value of their houses are going down the drain. They're going to have concern over the safety of their savings and pensions. Politicians may say what they want, but they're not going to be able to guarantee everything. So the euro is better. It's got a higher euro. Lower euro, which is going to make it more attractive for them to sell overseas. But who's buying? Growth is toppling well below forecast. Inflation is still fairly high, though it is easing with oil prices coming down. UK's up the creek without a paddle. Same situation as Europe. Consumers under pressure, house prices falling, and so on. Nobody is getting anything to win out of this. Asia, the developing countries, they're not going to be able to sell their products because there's nobody buying. So, we've got a bit of a spiral here, and I can't see at this point any way out of it. I don't think that you're going to get any sort of strong recovery even over the next year. I think it's going to be more stable, but I don't think you're going to get any more recovery, and you've still got the risk of further market shocks, banks going down and things like that, especially if we're going to see the sort of move in dollar yen as I think next year, and that's going to be in the yen crosses as well. As I said, repatriating assets. Japan is going to do really badly because with the yen that strong, there's no way exporters are going to be able to sell. So that's going to be another big shock into the credit markets. So the long term is not looking good. And some of you may read what I read, and I was reading the other day about December 21st, 2012, which is going to be the end of the world. Actually, it's got a bit of basis behind this one. It's all to do with our solar system going through or our planet going through the galactic equator, which will switch our poles from north to south, and therefore there'll be a shift in the Earth, where because the poles are going to start revolving a bit. That's a bit exciting. We'll look forward to that one. Glad it's still 4 years' time. Ed, you're going to say something to me, or maybe you're not. Wait a second. Yeah, just like the 2,000-year bug. We shall see. It's all good fun. But I do think we're going to see some pretty difficult times over the next 2 to 3 years in the financial markets. Anyway, onwards. Let us just go through first to the cycles. I won't spend too long. There's just a few things I want to show just in case there's somebody who hasn't been to seen these before, yen cycles pretty bearish. Whichever way you look at them, it's bearish into the end of next year. That sort of move down is certainly going to look as if it's going to get down to that old 79.70 low. So hang on to your hats and coats there. That's going to be a rough ride. Now, what I wanted really to point out this particular week is the daily cycles. Okay, this was a bit of a strange situation where the major cycle low didn't really produce much of a bounce at all. And we've had a low here, we've had a low here, we had a low here, and we're coming down to a low which is due to find a low around about a month's time. Okay, could be anywhere between 2 to 4 weeks. And that should be making its way down very close to this 95.71 low. Okay, so that is where we've got the risks still lower for dollar yen, and that I think is going to be probably the clearest picture we're going to get. But basically, you can see that we're still seeing a very bearish situation right through to the end of next year, which is why I think you're going to start seeing life insurance companies here beginning to bail out of T-bonds, and that's going to have a big effect. In the short term, in dollar yen, we've got this cycle low in about 2 to 4 weeks' time, and that should keep us going down towards this 95.71 low. Basically, this should be going down in a 5-wave move. It should be a new wave A. We'll see a correction in wave B into the new year. If you see, I can't get up there, but basically, just go into the weekly charts. You can see here that we've got the weekly cycles going down into that time frame, but you can see even here in the weekly charts we're expecting a bounce. Therefore, probably just moving into the new year, might even just scrape into February. January, February time, we're going to start seeing everything begin to fall away. And that is going to be the end for dollar yen for next year. So basically down over the next 2 to 4 weeks and then back up into the new year before it crashes. The euro, again, I'll repeat that. These monthly cycle lows are looking somewhat better. I'm still not totally convinced. This is not a huge correction to the big moves higher we've had in the euro, but it's just looking good for now. I'm getting messages from admin, and I haven't really changed any of the charts, so I'm a little bit surprised, and I don't know quite what to do about this. Anyway, you can see that this green cycle is moving higher, but before long, by January, February time, and I suspect a little bit earlier, it might even be over the next few weeks, we're going to start to see that come off. And in the daily charts, we've got ourselves still a rising red cycle and blue cycle, but this green cycle and yellow cycle are beginning to come off. So I do think that is going to bring us lower into the new year. Okay. For the Swissy, just to repeat that one again, really the monthly cycles are still very bearish. We're seeing some sort of correction. I don't think this will last for too long. Just to look on the dailies, which is where we're going to be affected, you can see this blue cycle is beginning to come off. And while the red is going up and the green is just coming to a peak, we'll probably see it move higher and then sideways, but you should see it move lower again into the new year. Okay. And finally, cable. This is the frightening one, that if it breaks this swing low at 170.46 by any large degree, the large degree I'm talking about is 169.77, that will look perilously bearish. Personally, I think it's going to hold. and we'll have to see. I'll give you those levels in a moment. And looking at the dailies, you can see that we are at what should be a major cycle, daily cycle low over the next week or two. And I think that is going to stall around the 170.46 area. Right, then, I hope those charts are better. I'm now going to go and try the shorter term charts, and we'll go through this. Right, dollar yen has been a mess, and it's been very, very difficult to actually follow the wave structure here. I finally came to a conclusion this morning that good, the platform's looking better on this one. Good. I've come to the conclusion on this one that what we've seen is a wave 1 down to here, which is 103.53. We had a 108.02 wave 2 high. Now, believe it or not, I can make a 5-wave move out of it. It may not look like it, but basically that came down in a 5-wave move that did actually imply a low around the 100.21 level. I think, therefore, that is wave A, and I said that in my report this morning. It's too late now for everyone here, but I said then we should see a move back up towards a 103.5 area, maximum 104.11. This is the reason why. This has been a very jagged move, and therefore I was considering that it's possible that we will see it stall around 103.44 for two reasons. The first one is, as you can see up here, this 103.50 area is going to provide pivot resistance, and there is a 41% retracement at 103.44. We got to 103.26. That may well have seen the top. At the most, in case it suddenly springs back up again later today, 104.11. That is a 50% correction. In terms of measuring a wave C, in terms of where this wave B is going to be, and I imagine wave B should be a little bit longer than this. The 104.11 would fit in better. Okay, the 138% projection in this wave 3 is at 98.18. If you had a correction up to 104.11, you'd find that the wave C would come in, I think it's the 161%, around that 98.20 area. Okay, so that is what I'm looking for over the coming week, 98.18, that sort of area. So sell into your others. That should continue to go lower. Once it gets to 98.18, we should see some sort of bounce. And it should be a fairly sizable bounce because, again, 40 to 50% bounce from this move from here, 108.02. So once you found that low, 108.02 minus that low, 41 to 50%, and you'll get your retracement levels for wave 4. From there, we should move down to that 95.71 area. That should be the wave A. Now, the reason I'm saying that is because I'm looking for a wave C coming down. I think this is ABC, X, ABC. This looks to be a very deep wave X, and therefore I'm looking for another ABC. So we'll just concentrate on the near term, but that should mean we will go back to the area of that low. Probably won't be exact, but that area. So that is likely to happen in 2 to 3 weeks' time, where we get down to the 95.71 sort of area. You can see we're beginning to get a bullish divergence in the daily market. I won't really want to look at that. It's not really a strong enough bullish divergence. Certainly, we've got nothing in the 4-hour market to, I just go like that, to really speak of. So still momentum is bearish. So I'm still looking for, as I said, further lows and for them to come down. That should deepen the bullish correction, bullish divergence in the daily market once we get to 95.71. So there we have it. Today, over the next week, down to 98.18, correction, and then later down. The euro dollar. Wow, did I get this wrong? I never expected to see it move down this far, I do admit. You can see how these this pivot cloud and the trailing stop have really been good stop losses all the way down. It's been holding all the corrections. We're seeing mild bullish divergence in the 4-hour market, but not really in the 8-hour market. We did in the hourly, and it's given some sort of correction, but we've got up to overbought already. So the risk to me is still lower. I'm still looking for a target. Now, what I'm looking for is here. Let's just take that off so you can see. There were two choices for me. Either this was going to be an expanded flat, but an expanded 38% expansion of that move was at 135.04, and obviously we got down below that, and therefore I think that what we're probably seeing therefore is a wave B. A wave equality target in wave C is at 127.09, so that is my target over the next 2 to 3 weeks. 127.09. What we need to see first, I think, is a move probably to the 223% projection. That's quite common in a fairly strong move, 223%, and that is at 133.02. So I'm looking for a peak. It's a bit difficult to say where this current peak is going to come to. We've already seen it at 136.17. And there is a pivot area around there. So maybe that will hold. If it goes any further, then it's more likely to get up towards the gap area up here, which is around the 137 figure 20 area. If it gets up there, I think it's going to be a good sell. Probably more likely, I think we've seen a top, and we're going to see it go down there over today and maybe into tomorrow, 133.02. Look for a bounce. Since this bounce was very short and swift, you should see a wave 4 that's going to be quite deep and quite long, and hence you shouldn't see a low for another 2 to 3 weeks, 2 weeks maybe. So let's see where that, if that 133 is accurate. Measure from this peak here, which was at 140, where was it? 145.63, down to whatever low this gets to. Look for at least a 50% correction. Sometimes they go 58%, but I'm wondering, we'll see what the sentiment is like as we get into that. Basically, things are still pretty bearish, but somewhere between 50 and 58%, 56.8% of the move from here down to there will be your correction to look out for. Okay, you can see that things are slowing down in the hourly market. Basically, the trailing stop here is still containing, and the pivot cloud is still containing that. And it's likely, since we've got the pivot cloud here, that it might penetrate into there, which could give you that 137 area, but I don't think it's going to break. It's going to continue down lower into that 133 area. Okay, and overall, by the end of the month, we'll be seeing a low around there, I believe. The Swissy. All right, this has been less severe, the rally here, but I've got myself 2 targets. Having had to switch myself around because I didn't think it was going to get back above the 114.17 area. This was a move from 100.10, and it corrected down to 106.86. An 85% correction, which the Swissy sometimes does, is at 118.90, and a wave equality at 120.93. So that's where I said earlier, between 119 and 121 is your target for 2 to 3 weeks' time. In this current move, this is a wave 1, a wave 2. A wave 3, if it's 176%, comes to 115.19. I suspect that one might hold. So be careful. You've got to watch it in conjunction with what's happening in the euro. If not, you'll go to 117.07, which is a 223% projection. Whichever this stops at will determine which target we're going to go for. Clearly, if we'd stop at 115.19, the target for the upside will be 118.90. If it gets up to 117.07, the target will be 120.93. Okay, so here I have to say I'm a little bit mixed. I was in favor of this area being tested earlier today, and it's beginning to come off. So I'm sort of looking at it and going, I'm not quite sure which one it's going to be. I think you take your cue from the euro, which is a little bit clearer, that it should get to 133.02, which quite frankly, given that it's up at 136, 3 big figures lower, it does suggest we could get to that 117.07 area. If it gets there, you should see probably a 38 to 41% correction, because this again was deep. Therefore, the correction should be fairly shallow. So measure from this 108.13 low to whichever high we get to, and look for 38 to 41% correction. We are already getting bearish divergences in the 4-hour, 8-hour, 4-hour, and the hourly chart, which is making the upside progress slower. So we've just got to watch out for that. So very much, as I said, watch what the euro is doing, and judge when we get to 133 where we are in the Swissy then. Cable. Right. Now, I have got myself 2 potential counts here. Either this was the end of a complete correction and we're going to see it tumbling down into next year, just keep going down, or we're going to see it bounce. We do have potential. It's only potential at this point for a bullish divergence in the daily chart. We do have a fairly steep bullish divergence in the 4-hour chart. We could see it actually moving down a little bit lower, and also here in the 8-hour chart. If this is an expanded flat, there are 3 potential targets. One is 171.55. This is a 23% target expansion. A 33% expansion at 170.36, which is close enough to the 170.46 low. And if it's 38%, 169.77. Now, I have a wave equality target in wave C at 172.05. Take care at 172.05. That could be the second wave C, and we should then get a wave X from there. Okay. Now, where is it going to end? Well, interestingly, I've had to rejudge this. I didn't look at this before, but taking a 261% projection of this wave 1 from wave 2 came exactly to 174.45. So as well as this 161% projection of wave C coming at 174.44, which is where we got to, it was also a wave 3 here. Now, that brings up mixed targets. If you take a wave 5, it comes to 168.42, so it will clearly break 170.46. Alternatively, if you take 176% projection in wave C, it comes to 171.78, which is actually very close to this 23% projection. So do watch that one. That could be the one to look out for over the next week or so. I do believe that obviously 172 is going to be something to watch out for. 171.55 is going to be something to watch out for. And we should see, because we're getting some bullish divergences developing, we should see some sort of reaction from those levels. The market seems to be fighting shy, getting very nervous of cable getting to that 170.46 low. A break of that swing low does look very bearish. So that's why I think we are probably in an expanded flat. Even that in the long term, and that's maybe what will happen into next year. If you remember the cycles going down into the middle of next year, would actually imply a move back up to this 186.67 area and then back down. And that would be a frightening drop, especially if dollar yen's going down at the same time. anyway, that's something to think about a little bit later. But for this week, immediate target for today, tomorrow is between 171.5 and 172. I'd like it to be 172. And then we'll have to see how the wave X develops. It should be a fairly complex one because this one here was very short, and that should allow us a low again over the next 2 to 3 weeks. We should be finding a low in cable, and I still suspect it will be above 170.46, or if it is below, not by much. Okay, so that is it really for the view for this week. Exciting times, or times that you want to go to the toilet very, very frequently because it's a bit frightening the way some of these things are moving. The pure fundamentals from economic releases are really not that positive at all, and not really going to have much of an effect. I think it is down to sentiment. It's down to people panicking. It's down to the stock markets, what investors are doing, pulling the money out of whatever they're doing. It seems to be putting your money into cash at the moment, and perhaps even into gold or something like that. So take it carefully. I do think we're going to see a short-term stalling in the dollar's rally over the next 2 days, over today and tomorrow. It should be for a correction only, but it should be a fairly long correction. So you're absolutely right. Can one chance leaving the screen and going to the toilet? Well, I hope you have a bucket under your desk anyway. Good luck. It's if you get into the right trade and it's moving, keep a trailing stop. Otherwise, just take care. So I shall speak to you this channel, same time next week. And good luck to you all. Bye for now.